yo, ladies and gentlemen, welcome to a little special video on Saturday talking about the idea of what to look for if the bottom for Bitcoin is about to happen. Well, what are you talking about, bro? How are you able to understand if the bottom is in? Well, listen, I've got to make this video short and sweet, so I'm going to bring you that fire right now, ladies and gentlemen. So if you are new to the channel, be sure to like and subscribe towards the end of the video. And let me bring to you a logic that you can use to try and establish the intention, the narrative of why money will start coming back into the markets and hopefully try and bring Bitcoin back up. Let's roll with it. In front of you, ladies and gentlemen, you can see Bitcoin on the daily time frame, and this is very good for us. Why? Because Bitcoin seems to be doing a very good job of holding inside of this psychological range area of the 20K zone. Now, what do we need to look for if we're going to try and establish the logic that Bitcoin could be bottoming out? And what is it that we need to be taking into consideration? Well, let's just look at what when I say they, I'm talking about the guys who consider themselves to be experts in the field of finance. You see, they can't pinpoint when the weather's going to be correct. But when it comes to finance, these guys are the experts. So the word on the street says that crypto could be close to what would become the bottom because diversification strategies are a little bit more, how can I say, more enticing once, and I'm saying it, once the Treasury yields peak. What do we mean about the Treasury yields themselves? Check this out. If I bring up the Treasury yields and match it up to Bitcoin, the logic says that when the yields are going up, it is an indication that things are favorable for the economy. At the same time, if there is a high long-term yield, it also can be an indication that there is inflationary pressures. Okay? Now, if you want a bit of a definition of that, just Google it. Go over to Investopedia and it will tell you. Treasury yields also show how investors assess the economy's prospects. The higher the yields on long-term US Treasuries, the more confidence investors have in the economic outlook. Okay? But high long-term yields can also be a signal of rising inflation expectations. So why are the yields important for us? Well, ladies and gentlemen, let's just bring up the NASDAQ to help you understand that. In front of you, you can see the yields to the left and NASDAQ to the right. What does it say to you? Let's just get rid of all of this madness on the chart. It tells you that when yields are moving up and NASDAQ is going down, it tells you that investors are seeking safety. You see, the NASDAQ is a volatile index. It makes up all the stock, tech stock, that is traded on the NASDAQ stock exchange. Like the S&P makes up 500 of the top stock US companies in the stock market itself. So the NASDAQ is no different. It's just predominantly based on tech stocks. The cryptocurrency, realistically, is like the digital version of the NASDAQ, okay? It's just a bag of digital assets. That's all it is. Now, let's just put aside, the correct way of saying if it's an asset or not, rather than start winding up all my XRP gang and saying that XRP is not a security. We ain't going to get into that, ladies and gentlemen. But generally speaking, we understand that Bitcoin and the NASDAQ have a close relationship. Bitcoin and the S&P have a close relationship. So what can we use with the yields to understand where Bitcoin's bottom may start to come in? Well, if the yields peak out right here, ladies and gentlemen, that would mean traders aren't favoring safety anymore. It means that they probably think that the outlook overall might actually start to look a little bit promising. So principally, what we would want to see is we'd want to see the yields top out inside this zone. We would then want to see the NASDAQ consolidating a little bit more inside this zone, okay? Which would give us the indication that investors are now going to change narrative because the market prices in the future. So would it be safe to assume that the yields have priced in the future? Would it be safe to assume that the NASDAQ has priced in the future? We've already got the problems of going on in the UK. We've got tax cuts during a mad devaluing pound. We've got protests happening in the UK. You've got energy crisis happening in the Eurozone. Beef with Ukraine and Russia. You got the Fed, who is just getting really frustrated at the fact that they can't control this inflation. And now we've got a booming employment market in the US where less people are claiming benefit. And it's just making things a little bit more difficult because consumers are still spending money. It's like they ain't bothered about inflation in the US. So the only people that are concerned about inflation are the Fed. Because people in the US are still spending money. Their confidence is all good. Now listen. Once the yields start to roll over, ladies and gentlemen, the Nasdaq will start to move higher because the traders will then be favoring risk. Right now, it looks like they're not favoring, and they haven't been favoring risk because Nasdaq's too volatile. They need something, they need a surefire investment that it's not risk-free, but it's going to make life a little bit easier and it ain't going to be so volatile. So most institutional fund managers are probably going to be seeking low yield returns. They just want to make a little bit of a return. They don't want to get caught up in volatility. That's why Bitcoin's dropping, ladies and gentlemen. Bitcoin's just too volatile. So once the yields start to peak out, that is when you'll start seeing interest coming back into Nasdaq, interest coming back into S&P, and interest coming back into crypto. Okay? Now here's another concept that you guys might find a little bit interesting. Check this out. The S&P Volatility Index, which we would understand to be the VIX. What does the VIX tell you? Well, the Volatility Index is made up of the options of the relationship between puts and calls. And what is there more of? Are there more puts? Are there more calls? Do they favor higher prices? Do they favor lower prices? The Volatility Index has an old saying. When it's high, you buy. When it's low, you hold. Now, just check this out, ladies and gentlemen. Let's go on the assumption of the following. If the Volatility Index tells us that when it's high, you buy, it tells us that that is where fear is at its highest. You know, people are like, oh my God, things are really bad, man. And the old saying does hold true. Now, to help you understand what I'm talking about, let's take certain points inside the Volatility Index and Bitcoin to understand the relationship between why when the S&P Volatility Index is high, it's an indication that Bitcoin could be making a reversal. So check this out. We've got the highest point right here on the Volatility Index. It reads 38.94, okay? And it closed at 29.9 on this day, which was the 24th of January, 2022. So throughout that whole session, ladies and gentlemen, the Volatility Index came to a high of 38.94, telling you that there was lots of fear at that point. Now, where is the 24th of January, 2022? So, 24th of January, 2022, we go all the way in the chart, and you can see that that is where the Volatility Index made a high of 38.94 and finished at 29. So at this point, investors across the board were bloody scared. When it's high, you buy. When it's low, you hold. In the hybrid system, Bitcoin printed a stopping volume candle. Now, already we had an idea that Bitcoin was likely to come back up, given that it had deviated away from the moving average. And that's the 50 EMA right here. Now, on top of that, ladies and gentlemen, you would have come to the understanding that the red vector candle itself would have been a clue that Bitcoin was likely to come back up because of the imbalance that was present in the chart. Now, ladies and gentlemen, if you are new to the channel and you're thinking, what on earth is this guy talking about? A simple exercise for you is to do the following. Go to tradersreality.com, all right? Download the Traders Reality Indicator. It's free of charge. And go into TradingView and try and match up where the red vector candles meet up with green vector candles or gray and white ones. In other words, when price moves back towards it, okay? And you'll start to understand what I'm talking about. So going back into the volatility index itself, at this point in the chart, Bitcoin had printed off a stopping volume candle and the test of the 800 EMA. The same time, the same day, the volatility index printed a reading of 38.94 when it's high you buy and finalized at 29. So the volatility was present. So that told us that the fear was present in the marketplace at that point in time. What did Bitcoin do after? Continue to move up. And it continued to move up and recover the red vector candle and then went on to go and recover the previous red vector candle in this range to the T. Look at the recovery of that red vector zone right there, ladies and gentlemen, to the top side of the wick right there. Fantastic. Mr. Market Maker does the dirty. So when it's high, you buy because of the investor's fear, because this reading will tell you that there was a number of puts at this point. They were scared. They favored lower prices. Fortunately, it went back up. There was liquidity for them to take. Stops. All right? Now, this green arrow right here, if we go towards it, it will take us to the 9th of February. So let's go to the 9th of February, which is right here. Now, on this reading, you can see that the volatility index closed at 1996. Now, the saying goes, when it's high, you buy. When it's low, you hold. Okay? So principally, when it's here, you don't buy. And that's what the reading showed. On the 9th of February, the volatility index reading showed a reading of 19.92. That tells us that the volatility index was low. That tells us you don't do anything because it's low. Now, you can use that and say to yourself, well, when the reading is low and it says you hold, it means that prices are probably likely to continue to go down. Okay? In other words, there's no clear direction or things are pretty normal. Okay? In this instance, you can see that upon the reading of it being low, price came down. So could you assume that when it's low and it tells you to hold, sell? You run a short. So a short is when you favor lower prices. Now, this zone right here, which takes us to the 24th of February, what was the reading then? The reading on the 24th of February, ladies and gentlemen, was at a high of 37.79 and closed at 30. So the volatility was present during that day. The fear was present during that day because Bitcoin had taken a nosedive to the downside. And if you've got a correlation with Bitcoin and the S&P, if we go over to the 24th of February on the S&P itself, we will see that during that day, everyone in the marketplace was a little bit concerned. Let's go to the 24th of February. Check this out. Look at that. This is the S&P, ladies and gentlemen. The S&P during that time experienced a mad amount of fear, which by principle of the hybrid system, the day initiated a reversal and printed a stopping volume candle and continued to move back up for the remaining 1, 2, 3, 4, 5 days. All because the volatility index said that during that session, people were very fearful. When it's high, you buy. When it's low, hold or short. Now, don't blindly just go into the idea that when the reading of the volatility index is high, you just go in balls deep and actually buy. No, you have to add confluences. You see, when the actual volatility index printed that low back in February and January, you can see that we had the hybrid system giving us the clue that the stopping volume candle principle was present right there. They had held over the 800 EMA. Bitcoin came back up. At the same time, from this high point right there, they had rejected the 200 EMA, finalized the vector candle recovery zone, which tells you that when candles get recovered, they are releasing liquidity. So there has to be a balance back in the chart. In other words, when Mr. Market Maker comes into a particular zone and hits a bag of liquidity, that liquidity is made up of liquidations. So when you go over to this chart right here, sorry for blowing out your eyes, ladies and gentlemen. There you go. When you see this chart, whenever they hit a pool of liquidity, like for example, there's $29 million worth of long liquidations at 18,800 on BitMEX. If I go to Binance itself on the same time frame and chart, we would then see that there is a lot of liquidations at this zone right here. So you got $704 million worth of longs at 19,025. All right, for the sake of argument. Look at when they hit those liquidation points. Look at this. You see this zone right here? This was $150 million worth of long liquidations, this zone. Now, if you notice, when they hit that range, they moved away from it. They hit the same thing again here and moved away from it. So why you see price move back from a vector zone like this? So whenever they recover a vector point, so let's go for this area here, where they come up into this vector zone and hit the liquidity, what is happening is when Mr. Market Maker reverses price against the traders who are favoring the opposite direction. So you can imagine when price is rising, traders are going long. Down below are the liquidation points. Down below are green vector candles to encourage price to move up. So when the market actually drops and recovers these green vector candles in the zone, ladies and gentlemen, once he's achieved the full vector candle recovery, this is where price initiates a reversal back up, because he has just now used the liquidity of the trader who was long. He hit their liquidations and he used their liquidity or their margin to offset his returns on his shorts. So you can't buy if no one sells, and you can't sell if no one buys. When you hit someone's long liquidation point, that means it gets sold. But in order for it to be sold, someone has to buy. So when Mr. Market Maker is selling his shorts, what he's doing, he's buying to cover. So the buy orders that Market Maker has on his shorts are used to pick up the sell liquidation or the margin calls of the retail trader who was long on the move up. So again, when you're long, your exit position is a sell. When you are short, your exit position is a buy, because you're buying it back. You sold it, but you're now buying it back. You sell from $100, you buy it back at $50. You profit on the difference of the value from you going short from here to here. You buy it back. That, ladies and gentlemen, is what happens when you see price returning to vector candles on all aspects of all assets across the board. So, to bring it back into the fray, ladies and gentlemen, what do we need to see for Bitcoin to actually bottom out? Well, listen, we can use tools like the VIX. We can make reference to the yields themselves, ladies and gentlemen, and say that if the yields top out, that gives us an idea that the NASDAQ is likely to go up. Bitcoin and the S&P and NASDAQ have a positive correlation. So when we start seeing the NASDAQ and S&P starting to move up, then we would be of the understanding that the bottom may be in. And as long as the NASDAQ and S&P can generate a few accumulation days. Now, what I mean by accumulation days is where they start to buy. Institutional traders are buying assets with high volume being transacted. We would then understand that the market is trying to follow through, which is in the eyes of William J. O'Neill's work on the canceling method, which is an acronym to break down the logic of why you would buy a stock, okay? If the indices initiate a follow-through day, then we would be in the start of a new uptrend. I never like to say bullish or bearish because they are emotional terms, but I like to refer to it as markups, uptrends, downtrends, because that's the thing I look for, movement. So, ladies and gentlemen, I hope this video has served its purpose, okay? Giving you a couple of tools right there that are going to help you understand when the bottom could actually be in. Only last week we heard about BlackRock is really optimistic about cryptocurrency. Principally, you'd expect people to get all excited about BlackRock. One of the largest funds in the world is interested in cryptocurrency. Where's BlackRock right now, ladies and gentlemen? I want to see Bitcoin recover this red vector candle and end up at 30K, ladies and gentlemen, to give me a belief that BlackRock has got an interest in Bitcoin. If you are new to the channel, ladies and gentlemen, be sure to like and subscribe, and I'll be checking in with you all tomorrow to bring in that Sunday night stream. Take care of yourselves, gang. Mad love. Peace.